Hey guys, this is Bahigani SMG speaking right here. So today, guys, listen. Right now, I'm gonna be very, very, very serious with you guys. No playing. If you're playing, I want you to like put everything, literally everything, put it on the side and focus. I want you to focus. So anyway, I'm just joking, guys. So today, what we're gonna be learning is about the market structure, guys. The reason why most traders lose money is because they don't have a good grasp when it comes to the market structure. How does the market move? Uh, you ask yourself. So right now, I do have few, at least, well, usually it's either buy or sell when it comes to trading, right? So I do have an uptrend for you guys right here. I just drew it. So it gives you an idea. Remember, guys, all these right here is just idea. It's just an idea of how the market moves. It's not the exact same thing when it comes to the chart because the chart can be tricky, right? But I want you guys to understand this because this is what is gonna help you grow as a trader and become a profitable trader, right? So when it comes to trading, the market either go up or go down or go sideways, right? So when the market goes up, it breaks the structure. As you can see right here, we have the market going up, right? So it's breaking the structure up right here. As you can see, the market is breaking the structure up. So when the market is breaking the structure up, we call it an uptrend. When the market's breaking the structure up, we call it an uptrend. An uptrend is when the buyers are stronger than the sellers. Guys, very simple. What happened when one team is stronger than its opposite team is the stronger team win, right? Same thing we use when it comes to trading. When one side is stronger than the other side, that means that side is a good ally, right? We want to ally. We want it to be our allies, right? We want them to be on our side or us be on their side, right? So as you can see, the market is breaking high, and making high low, which means the buyers are stronger. In this type of the market, we buy. We only buy, right? We want to buy because we want to go with the trend. The trend is our friends, right? So that's for an uptrend, guys. Very simple, not complicated, right? So we'll go down and check the what happened when the market's breaking down. When the market's breaking the down structure, right? So we have here a downtrend. A downtrend is pretty much when the sellers are stronger than the buyers. This is when you want to sell. You want to go with the seller, guys. You do want to sell in this type of the market because the market is breaking the structure down, right? We're making lower highs, right? We're breaking lower lows and we're making lower highs. We're breaking lower lows and making lower highs. So you want to sell. You want to go with the market because the market is going down. You go against it, you lose money. You want to sell. So this is an idea. I'm just giving you an idea. We'll go on the chart and I'll show you how to identify these levels when it comes to the chart. But right now, I want you to focus because this is what you're going to use to identify key levels in the market so you can make money. Remember, guys, all I want to do is helping you guys. I want you to become a profitable trader. It won't be easy, it won't be quicker, but like with practice, time, and persistence, I believe you can do it. So bear with me. So we've spoke about the uptrend, which is buyers are stronger than the sellers, in which case we only look to buy, right? And we've spoken about the downtrend, which is when the sellers are stronger than the buyers, we only look to sell because we want to go with the big guys, right? Because the sellers are stronger in this case, so we only go with them. Simple as that. Not complicated. We're not trying to recreate another wheel here, right? We just want to go with the one that's rolling already. So if it's a buy, we buy. If it's a sell, if it's a downtrend, we sell. Simple as that. So you might be sitting there asking to yourself, what is that thing on the side? What is this ugly looking thing on the side, man? What is this, right? So this is a ranging market. It's when the sellers and the buyers are equally matched. So no one is in control of the market. Sellers are stronger as the buyers. It's a tough battle, right? Because no one's beating the other one. They're all equally matched. So what do you do when you encounter this type of the market? Simple, guys. You only trade in between the supports, in between the support and the resistance. You only trade in between these level, right? When the market is at the resistance, you only look to sell. And when the market is at the support level, you only looking to buy. Simple as that, guys. We're not trying to be a hero. We're not trying to like fight the bank, fight the financial institution. These people, these guys got millions and millions floating in the market. You go against them with your few $100 or like few $1,000, bro, like, or 100,000. No matter what, how much you have, if you're retail traders, you will lose. Because remember, even the big banks, the big financial market institution, the big financial institutional market, they also lose, right? So this is a tough game. This is a tough game to be in. So you gotta play smart. You gotta be with the big guys, right? So I'll give you some key idea of how to trade the ranging market. The ranging market, when the market is ranging, you want to trade it between the support and resistance, as I just said. So when the buyers are when so when the market has tested a support, you want to buy, right? And when the market reach a resistance, you want to sell. Same thing here. Tapped at the support, you want to buy, and then at the resistance, you want to sell. Simple as that. So there are a few things that happen at ranging market, right? That's I want you to pay attention to, is when the market reach these key levels, these key supports and resistance, the banks and the financial institution likes to trick retail trader. They like to trap, in other words, to hit your stop loss or to fake you out so you lose your money, right? So what they do is they fake out, they make a false breakout, right? They'll show you as if the market is about to go up. They will show you as if the market is breaking the structure and going up, but it doesn't go up. They turn it quick and drop it down. As you can see, that this is called a false breakout. The banks tricked the retail trader and trapped a lot of buyers. So you can see a lot of people start buying right here thinking that it's a break of the structure, right? A lot start buying here thinking that the market's going to go up, but the market went against them, trapped them, and hit their stop loss and went down. So us as experienced traders, us as humble us as humble guys, we want to go with the banks, right? So we want to wait and see what happened, and then we follow the big guys, bro, because we don't want to get trapped. So we wait, and when we see the market retrace back in the structure, retrace back inside this resistance, that's when we enter sell, because we know that the banks are trapping the buyers. So we do want to sell and go with the bank. And you can see we tapped at the support, rejected the support and went up, and then we fell to test the resistance, and then the market came back and broke the structure here. So what do you do when you see the market breaking the structure? Remember what happened here, guys. The market did break the structure, but it was a false breakout. It came back. So whenever we see that the market is breaking the structure, we stay out of it. We don't want to enter because it could be a risky game, right? You don't want to enter and be trapped as the buyers who got trapped here, right? So we just want to wait and see what the market tells us. So usually, whenever there's a break of the structure, there's always a retest, right? As you can see, in the uptrend market, whenever the market broke the high, it came back and retested. Whenever the market broke the high, it came back and retested. Same thing when it comes to downtrend. Whenever the market broke the low, it came back and retested right here. So every time the market breaks a structure, it comes back and retests that structure. This is for the downtrend. Same thing when it comes to the ranging. When we finish trading in between the support and resistance and break the structure, usually the market will come and test this structure. So you can see we retested this level. And remember, guys, this was a support level. Whenever a support level breaks, it becomes a resistance. So you can see this, it becomes a resistance. And resistance is when we sell, right? So you would have sold that market right here and go with this movement because it's support. As you can see right here, we have a few as you can see right here, guys, we have the market. So we have a support right there, and we have another support right here, which gives this level a very high strength, right? So whenever it breaks it and comes and retest it, you want to sell and go down with the market, because remember, a broken support becomes a resistance, and a broken resistance becomes a support. So if this movement would have happened higher at the resistance, this would have become a support and go up with the and go up like this, but it didn't. It went down, so we sell right here. So this is just the basic, guys. This is just an idea, a big, like an idea to have in your mind. So when you go to the chart, you use this as your guides, right? So I'll just go to the chart right here. I have a few example right here. So as you can see right here, the market is ranging, right? Ranging market, we only look to buy or sell. And right here, the market is trending up, which is here, like breaking the structure up. So on the chart, it looks like this. So it's uptrend, uptrend, uptrend. So you only look to buy right here. If you were trading this level, you should have only been looking to buy. Right here, you should have only been looking to sell in between support and resistance. And here, it's a downtrend. You only would have only been looking to sell, right? So I'll start with the ranging market. Ranging market, as you can see right here, we said that when the market is ranging, we only look to sell in between the resistance and support, right? Like you only want to sell at these level and buy at these levels. So if you see here, you can see that we have a resistance right here, and we have a support right here. We have a support right here. So the only thing you would have done if you were trading in this market is only looking to buy and sell, buy and sell. You buy and sell like this. You buy and sell. So you can see here the market broke this structure. So that's how you trade a ranging market. And this right here is an uptrend. Um, you can see an uptrend market is when the buyers are stronger, so you only want to be looking to buy, right? But as you can see right now, we're on the 1 hour time frame. It's hard to tell, right? Like you can still tell. Like you can see right here, the market broke. The market made high. It made high. Came to create a high low, and went broke this structure. It broke high, made another high right here, So I'll just write it down so it doesn't confuse you guys. So you can see right here we made a high, and then we came whenever we broke that high. Remember, when we break a structure, we can't retest it. We made higher low, so we retest the structure. Higher low, we retest the structure. Same thing. So when we made high, this is higher low, and then we go and make a high. What happened after high? The market comes retest the previous high. So you would have bought here. It makes higher low. So you would have bought at the higher low and move with the market up. This is a uptrend. So it does this all the way up. Same thing right here. Same thing right here. As you can see, we created another high. Another high, right? Oh, sorry guys. So we create another high right there, and then a higher low, a higher low right here, and then higher high, a higher low right here. So you only go with the flow of the market, right? You want to go with the flow of the market. It's easier, guys, so you don't get trapped, right? So this was just an example of an uptrend. An uptrend breaks the structure up, and you only want to be looking to buy, right? So I'll just clear this up so it doesn't confuse you guys, because too much drawing on the chart, it can be confusing even for myself, right? So I'll just clear this up so it becomes easier for you guys to understand what's going on, right? So the example I just gave you, you can always go back and rewatch it. It's a good example to show you how the trending up market flows when it comes to the chart, right? So guys, remember, if you have any question, always feel so I'll just leave that part. Always feel free to like reach out to me and ask for any question. So right here I have a downtrend, which is a selling market. By that I mean is it's good to look for sell, right? Because sellers are stronger than the buyers in this time in the market, right? So I'll just drop down, because you can see here the market was dropping very hard down, so it doesn't leave the structure. But if you go to the lower time frame, let's say I drop down on the 15-minute, you can see that it sort of like um, leave some clue, right? Like you can see it's even on the 15-minute, it still didn't leave much clue, but you can see that like the market's been breaking down, right? We're breaking the structure down. It's been making lower low. As you can see, we're making lower low. As here you can see, we made a lower low right here, and it went back, made lower high, higher low, and then the market broke. As you can see right here, we broke this level, right? We broke this lower low. Remember, whenever we break the structure, the market always go back to retest that structure, right? So we broke this lower low. We create another lower low right here. So sorry guys. Okay, that was so we broke this lower low. The market went and create another lower low, and then retraced back and create another higher low right there, right? So you would have like sold, right there and go down with the market, because you knew that the market broke the lower low. It'll go create a higher low, so it'll go retest that lower low, which was a support. It becomes a resistance, and then you go down with the market. So it kept doing the same thing all the way down, guys. It kept creating, breaking the low like this, breaking the lower low, making lower high, lower low, lower high. Guys, it's very simple, but you need to practice to be able to understand it well. And if you have any question, always feel free to ask me. High or low. So here another one. As you can see, we we broke this structure. We broke this structure. We broke this lower low. We broke this lower low, and then the market retraced. And remember, every time we break a structure, we always go back to to retest it. So we broke this lower low. The market went back, retested, and create a higher low right there, right? So this is an example of a downtrend, right? A downtrend right here. So you want to be looking to sell. So when the market is moving, is breaking the structure down, you only want to look to sell. And when the market is breaking the structure up, you only want to look to buy. And when the market is ranging, you want to be trading in between support and resistance. So again, guys, I'll just clear these. I'll just clear some of these information so it doesn't confuse you guys. Um, so I'm just gonna clear this. And again, guys, whenever you're trading, always try to make your chart look as simple as possible. You don't want to have too many drawings, too many like it'll confuse you and you won't be able to read the chart well. Uh that's why it's always important to keep your chart clear so it doesn't confuse you, right? So that's this is why I'm gonna clear these small details so you keep a good idea of what I've been teaching you. All right, guys. So I'm just gonna go back, zoom up to the higher time frame. This is the 1 hour time frame, and again, guys. So yeah, so this is pretty much what I want to teach you guys, and I hope you learned something because if you learn something, this will add so much value in your life, and one day you'll become profitable. So guys, thank you very much for watching. If you watched this far, that means you've learned something, hopefully. And if you have any question, always feel free to ask me, and always feel free to reach out to me, guys. My Instagram is down below, so don't forget to follow me, and don't forget to ask any question on the comment section, guys. I just want to help you guys out. I just want to give you some, I don't know, some idea back, because it's very confusing when it comes to these kind of information. There are so many information, you don't know which one's good. But as I just showed you guys on the chart, and from what I drew out and tested on the chart, you can see, guys, it works out. So you have to practice, you have to like put in work, and you have to like um be smart about it, guys, and hopefully it'll help, it'll work out for you. So thank you, guys. Again, don't forget to follow me on my Instagram. Do it right now. Thank you, guys. I appreciate your time. Have a good day. Thanks.